Hello. In terms of what we saw overnight, very much focused on two central banks. First of all, the Bank of England, where we saw two members, Mr. Will and Mr. McCarthy, actually dissenting for the first time we've seen in the Bank of England for about 37 months. I don't think it's necessarily going to surprise too many people. I think most people knew that they were verging on the more hawkish angle, and there was a possibility this year that they were going to dissent. So perhaps the timing may surprise a few people, but the actual fact that they have done probably won't. Now the question is we need to see three more members of the Bank of England actually come out and dissent and actually call for rate hikes before the Bank of England can actually move. And if you look at the composition of the rest of the board, it doesn't suggest that anyone's going to be looking to dissent. Most of them are either neutral or dovish. So certainly we did see a bit of a pop in sterling, but I think people looked to fade that straight away. People came in and we saw sellers, although we have seen a bit of strength in sterling, mainly against the euro, which looks probably one of the more weaker currencies on the block at the moment. Euro dollar trading through that 133 handle, although I'd probably be looking to take profits on the trade there and look to resell at slightly higher levels. If you look at the Fed minutes, if you look at the price action in the markets, if you look at the front end, for example, of the 2-year, the 2-year was up 5 basis points. That clearly showed me that the minutes were taken as slightly more hawkish than expected. If you look at the slight offer that was in gold, if you look at what we're saying at the long end of the curve as well, it clearly shows that markets got more information that they bargained for. The Federal Reserve have given the market this idea that there is a clear debate taking place about when they're going to look to start raising short-term rates, what their exit strategy will be around raising short-term rates, and potentially also the reinvestment of the proceeds from maturing mortgage-backed securities and US Treasuries, which they are currently holding on their balance sheet. The fact that they are going to reinvest those proceeds suggests that the balance sheet of the Fed is not going to contract too much anytime soon, which I suppose is broadly negative or slightly negative for the US dollar at the margin there. But I think certainly if you look at price action, it suggests that markets were under a bit of pressure there, certainly in fixed income land. But the dollar is flying at the moment. If you look at dollar yen, we've got it breaking out. It's at the highest levels for a number of months now. The dollar index is looking really quite positive, although I do personally believe it's a little bit overbought. Now the premise here is that Janet Yellen could, on Friday at midnight in her speech at Jackson Hole in Wyoming, actually come out and push back a little bit of expectations and actually come out slightly more dovish on a market that is starting to over-own the dollar a little bit. So I'd be certainly taking profits here on the US dollar. We've been advocating long dollar yen trades in our one to watch this week, and that trade's worked out quite well, but I'll be looking to take profits on that today. Otherwise, it was quite impressive to see the fact that the S&P managed to rally despite the sell-off that we saw in US rates, and we've now got new highs again, or higher highs should we say, in the Nasdaq. The S&P is only a few handles away from making a new all-time high. We've actually got the S&P futures at all-time high. Market breadth is positive as well. So I personally believe that we're going to see a new high coming through. And that should really be reiterated here in Australia today. We're looking for the market to print a higher high, take out the highs that we saw in February, where I think it traded up to 56.44. We've got our opening call certainly above that at the moment. AMP's come out with its first result today. They're the first company off the block. That looks like a slightly pleasing result in terms of its underlying net profit being above the expectations of the market. The dividend at 12.5 cents was bang in line with where the consensus was, so that will please the fact that it's up 9%, but certainly that was in line. Otherwise, we've got a huge range of earnings, the likes of Cabcharge, Pan Australia, the ASX, the company there, and Tattersalls as well, amongst others. So certainly it's looking to be a promising day here in Australia. BHP's ADR slightly up, but certainly I think it was all about central banks last night. The fact is we've got a little bit of new information, and for me I'm going to be looking to lighten up on the US dollar positioning ahead of the Jackson Hole meeting, which promises to be slightly dovish to the US dollar at the margin there.